Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, September 29th, and end of the month, end of the week, and end of the quarter. So kind of a big day today here in terms of the financial markets here. Today we do got a lot of economic news to go over today, so we'll start off with the personal income for the month of August. So back in July, we had a 0.3% increase in personal income. Forecast for August supposed to be a little bit tamer at 0.1% increase, but it came in at 0.2, so a little bit better than expectations. But again, still relatively low from to try get that inflation level any higher. So again, personal income is still relatively low compared to, even though you see 0.2, it's coming in low, better than forecast. But again, that's what's keeping the inflation numbers down. On the other hand, we got the opposite. We got the consumer spending. So we got people money coming in, and of course money going out. So back in July, again, we had a pretty good month there, 0.3% increase in spending. Forecast was at 0.1% in August, and it came in at 0.1% increase for spending. Here's the number we've been really looking for. This is called the core inflation. This is the Fed's favorite gauge for inflation. It's the personal consumption expenditure, or also known as PCE. Now, when we strip out food and energy, which creates a volatility because the Fed has no control over anything that goes on in the Middle East and that might drive up oil prices or any weather-related items that might affect food prices, they strip those things out because of the volatility of those. So that's why they get what they call the core. And this is the number they look at. So back in July, we had a 0.1% increase in the core inflation. Forecast supposed to be 0.2% for August, but it only went up 0.1%. So where does this leave us year over year? It leaves us at 1.3%, where previously it was at 1.4. And just a matter of months ago, we were actually up to about, I believe it was 1.8 at one point. The Fed's target goal here is at 2%, and we're going backwards. Now this is going to have to start making you wonder if the Fed's been raising interest rates a little too fast or not, because typically the Fed will raise rates to stave off inflation, and they may have done too good of a job, and that's why inflation is going backwards. So something to kind of keep an eye open for as a result of that. I mean, they keep saying transitory, but they've been saying transitory for quite some time, and they still can't get inflation up to their level of 2% that they've been wanting. But again, they start raising rates, and again, when we start going up, we've gone backwards. So again, it's going to be interesting to see what they say next time in November's meetings about inflation. We got Chicago PMI. This is manufacturing in the Chicago region. So in August, it was at 58.9, and it jumped to 65.2. So this was a good number. People, obviously, the market's going to really like that. And then consumer sentiment, we have a final revision. So previously one came out at 95.3. Forecast was 95.1, so it came in right at forecast 95.1. So pretty much right in line with things. People are feeling about the same about where everything is at. So obviously, people are still feeling pretty decent. So let's take a look here. Stock market's mixed. Dow's the only one that's down so far this morning. We got S&P was down and it went upwards after the Chicago PMI came out, so that was good news for them. They're in kind of a position right now, the stock market, you're kind of seeing that because they've been going such highs, now you're starting to see a lot of stocks in maybe overbought position, so you might see some corrections coming up here. So they're just a little reluctant on really pushing it too much because, again, there's nothing, inflation's low, we still haven't got the tax reform passed, so we don't know for sure. There's been talk about the healthcare, but that didn't go through. So again, we don't know about it's hard to get too excited about the tax cut unless it gets passed because of all the other things that have been trying to go through, and everything keeps failing. So as a result, they're kind of looking at the market and seeing this increase, and we're kind of at a point where some stocks might be a little risky because it might be a little overpriced right now. So they're going to be taking a little bit of a break. Plus, you got Janet Yellen's comments earlier, getting pretty hawkish, saying more rate hikes are necessary. And of course, now we're seeing inflation going in the opposite direction. So it's kind of making a pause right now and reevaluate where things are at. We got a Fed speaker, President Harker, speaking out later today, so that might give some insight as to the Fed, and also they might they'll probably be looking at what he says as well. So those are things kind of going on in the stock market. Let's look here at the bond market, and as you can see here, we have a pretty good volatility here, as we touched up on the 50-day moving average, as well as pretty much touching on the 100-day moving average. And right now we're kind of selling in at this, like creating the star effect until it gets its direction as to which way it's going to go. So at one point it was higher, but of course now we're down about 3 basis points, so nothing to really bring the rates down, but about the same as where we left off yesterday. So let's go ahead and take a look here at 10-year Treasury. And 10-year Treasury was down, so it's kind of nice, but now it's up about 2 basis points, and it's pushing up against the 200-day moving average. So it's been touching this 200-day moving average. It's kind of resisting it, which is good for the bonds, because if it breaks above this, that means bonds could continue to drop further and rates will go up. But if it can hold this might help us out in bringing the rates down. Might get some improvement in the rates again. So again, we got to wait for this 200-day moving average. If we can get this to close below this level here, that would really help us out as well. But as of right now, rates are about the same as where we left off yesterday. That pretty much concludes it. I hope you guys have a wonderful weekend. If you want to get more updates, just come over to Mike Bjork on Twitter. Come over to Twitter. I'm underneath the handle Mike Bjork, and receive the updates throughout the day. You guys have a great weekend again, and thanks for watching. I'll see you guys on Monday. Bye-bye.